What do you say when the world is in the process of going crazy? I've chosen to stay pretty much quiet, not add to the noise. And my return to video land, let's just focus on the charts. And so in this video, what we will be looking at is energy and in particular the WTI crude futures. In the current chart we're looking at, obviously we've got 8 different panels. Basically, I'm watching crude oil and natural gas in some different markets. In the oil markets, of course, we've got Brent, which is more of a European facing price, and then WTI is American or U.S. price. And then, of course, in natural gas, it's more obvious. We've got U.S. and UK. So obvious observations looking at these panels. You know, there's Brent crude at 118 and 57. It was interesting. My cynical perspective on the financial markets, it seemed obvious to me that Brent was being capped at 115. Yesterday it was like just below 115 all day long and hardly moving. Clearly, I don't know. To my estimation, it was being capped at 115 yesterday. Clearly, the cap broke, and so now we've got $3 higher, 118.57, 350. Brent crude again, WTI. And so, you know, if you poke around in the commentary out there in the financial markets, pretty common theme is that Scott Bessent, the American Secretary of the Treasury, was directed by Trump specifically to start trading in the petroleum markets, which of course means sell oil short to suppress the price. And so he's been fairly successful at that, Besant being the he, for the last 2 weeks. You know, he was able to hold WTI futures below $100 for the last 2 weeks, basically a sideways consolidation there. But then on Sunday night, we got a gap higher when the futures markets opened Sunday night. We got that gap higher, and then support again today on the breakout level, which we'll look at this chart more closely. Natural gas. One of my observations about natural gas is if we look at let's actually expand this chart. If I do I think if I do an alt enter, there we go. So this is the price of natural gas in the UK, obviously. And so if we go back here at March 2nd, anyway, we see this obvious discontinuity where, you know, natural gas in the UK was trading at that level, darn near doubled. Let's, just for curiosity, let's go into the monthly level. So let's see that right there. We want to 63%. So in a single month, the cost of natural gas in the UK went up 63%. I mean, you know, holy cow. Imagine living paycheck to paycheck and somehow you got to cover that bill. Well, and then I look, you know, after noticing that, I look at the price of natural gas in the US, and okay, so here's the spot price. If I wanted to go out on the street corner and buy some natural gas, you know, that's what it would cost me, supposedly. Here's the price in the futures markets. And so anyway, what I don't see in the U.S. markets is the 63% increase. that I see in the UK markets. And so anyway, it makes me suspect that the price of natural gas in the US is being managed more tightly or more successfully uh, than it is in the UK. But, that's just me. And a follow on thought to that is, it's like, okay, are American consumers more sensitive to the price of gasoline at the pump or natural gas flowing through their pipes? So, a lot of American consumers, natural gas is it's the heat at the stove where they prepare their food. It's the hot water that comes out of their faucets, whether they're standing in the kitchen cooking or standing in the shower washing their bodies. Um, and there's a little bit of a delay in the cost of natural gas because as an American consumer, you only see that cost once a month. Anyway, I don't know. That's didn't want to go off on that tangent. Let's switch now. So now we're looking. This is the daily time frame. This is like crude oil, the futures markets on the NYMEX, so U.S. market, U.S. exchange, daily time frame. Couple of things to notice in this chart, and so let's start with oil was, kind of drifting sideways in the $64, $65 range. And then we had this discontinuity, this event where oil jumped higher and then jumped into a new price range. And so that's where we're at now, is in this new price range, or, this Brian expressing his opinion, obviously, on the financial markets. This was Sunday night. When the futures markets opened on Sunday night, we got a $2.96 gap higher. That's a sign of elevated energy and big time. $3 move in the oil markets is, significant to say the least. So anyway, that was the open on Sunday night. And then, breakouts in the financial markets often fail. And so I don't want to climb out on a limb and claim that the price has now broken above 100 and never again will it drop lower. But we are seeing here on Tuesday, so, that was Monday, now we're in Tuesday. It appears that WTI oil futures are finding support at that $100 level. So we will see as time goes forward. Other observations in this chart, the next obvious support, or resistance level, to my estimation, is up here. It's 115. So assuming that this breakout holds, I would set 115 as my next target. MACD horribly overbought. Obviously that's not surprising with a price move like that. And yet, even in light of a price move like that, MACD has yet to reach. No, I misspoke there. MACD has reached the level of this previous high. And so, again, price is horribly overbought at this point based on both price action and MACD. Energy very elevated. Let's continue. The weekly time frame, it's the same action, just in a more more condensed in a higher time frame. There's the discontinuity, big gap higher. Clearly, that's not normal price action. I would suggest that is repricing. It's not a rally. That is a repricing event. The new floor on gold. You can tell where my mind is. New price on oil, new baseline price on oil is $100 a barrel. So, and you know, call it bullish, call it bearish. Um, there is just a tremendous amount of energy wrapped up in those, what is that, four price bars, and actually we could throw that fifth part. That's a tall or wide ranging is the language I use in my book. This is a wide ranging price bar, a sign of elevated energy. And then we have four dojis in a row. And all doji candles are signs of elevated energy. Look at that one in particular, Jiminy Cricket. And so anyway, I just pointing out that there is a tremendous amount of energy pent up in the oil markets right now, and probability suggests that that pent up energy will express itself to the upside, because that is the current trend. It could go in the other direction. There's no guarantee, but probability suggests higher action. Same thing. So this is crude in the monthly time frame. It's not as obvious. This chart's kind of interesting. Makes me think that the price of oil has factors that don't chart well. I guess I'll put it that way. Next price target I would put in the monthly time frame is 140, based on these highs back in 2008. Not much more. Oh, yeah. The only other thing to say about oil in this time frame is that look at MACD. I mean, MACD has just a huge room to run before it runs into this prior high in MACD. But based on a MACD level, before price of oil gets overbought in this time frame, the monthly time frame, man, that's a long way down the road. Which is not. I'm chuckling. It's not. It's not funny. It's not amusing. It's an interesting dilemma that we have to face as humans. This is a resource, if you're unaware of it, oilprice.com. Excuse me. Yeah, oilprice.com. You can drill down to this particular page. It shows the price of oil, around the world. You can see, $121 in India, 128 in Dubai. So anyway, it's interesting, at least to me, to see what oil is trading for in other parts of the world. In my opinion, the price of oil inside America, which essentially means WTI, that price is being managed. Let's continue. I'm a precious metals guy, so video wouldn't be complete without looking at the precious metals. Their silver obviously had a very nice day. $75, up $5. Nice. What I had been noticing in silver for the last week plus, almost 2 weeks, is holding below the $70 level. Clearly we broke above that level. Silver broke above that level today, and is pressing higher. Has the resistance level at upper median line. This is a Schiff pitchfork Price obviously running into resistance or potentially running into resistance at that level. Gold in the daily time frame, same kind of story. Nice action, nice rally today, pushing up into resistance again at this is the median line, and this is a modified shift pitchfork. So shift pitchfork here, modified shift pitchfork here. While we're on this chart, let me just point out, I love the way gold tested the 200-day moving average and then popped. It's let's see, that was 4,100. Gold closed 4,400. Yeah, so gold popped down, tested the 200-day moving average, and then jumped $300 higher. So just love that action in gold, feel really good about it. Nice follow through with a $156 rally today, pushing up into and a little bit through, closing above resistance at that median line. So very nice action in gold. I'm not as confident in silver. We didn't get the poke, didn't get a poke all the way down to the 200-day moving average. Although it crosses my mind that a positive spin on this price action in silver relative to the 200-day moving average, it's a bullish offset. When the price action is so bullish, or more bullish than we might expect, sometimes we get a bullish offset, and of course the opposite can occur, a bearish offset. But the bullish offset in this case would be that gap between the 200-day moving average and the trend line that I just drew. And that would be a sign of strength, i.e. there is so much strength in the silver market that it was unable to push all the way down to its 200-day moving average. I'm babbling, and if you don't give if you don't give two hooties about technical analysis, you've already stopped watching this video. So anyway, don't know what to tell you folks. Jiminy Cricket. It's interesting times. I believe, my personal beliefs, crude oil has broken firmly, decisively above $100 a barrel. The world economy is going to take some time to adjust to that new reality, and it's likely that adjustment process, the adjustment period, is likely to be bumpy. We'll look at the stock markets. Stock market's not very happy right now. So anyway, I'm going to wrap it up there. Talk to you soon, folks.